Okay, Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. We are from Group 6 and we would like to present that our material is about subject, object, and text income. And I'm here with Dea Putrianson and Rio Fandi Sitepu. First, income tax subjects. The subjects of income tax is an individual, an undivided inheritance, an entity, and a permanent establishment. However, based on their domicile, the subject of income tax includes domestic and foreign income tax subjects. The types of income subjects are personal income tax subjects, domestic income tax subject, subject of overseas income tax, corporate income tax subjects, subjects of domestic agency income tax, and subject of foreign agency income tax, inherited income tax subject, and permanent business entity income tax subject. There are some examples of natural persons and entities that are not subject to income tax. First is embassy, consulate general or other office that are representative of foreign countries, and officials of foreign countries who serve as diplomatic and consular representative official, and international organization established through a Minister of Finance decree. And the last is official representative of international organizations appointed by the Minister of Finance. And the legal basis of income tax subjects is Law Number 36 of 2008 concerning income tax, Regulation of the Minister of Finance Number 215/PMK 03/2008 concerning the determination of international organizations and officials of representative office of international organizations that are not subject to income tax. And the next slide will be presented by Dea.
Assalamualaikum warahmatullahi wabarakatuh. My name is Dea Putrianson. I want to continue to explain about object tax income. The object of income tax is any additional economic capacity received or obtained by a taxpayer, whether originating from Indonesia or outside Indonesia, which can be used for consumption or to increase the wealth of taxpayer concerned, under whatever name and form. Income tax objects according to the tax law. The first one is replacement or remuneration in respect of work or service. The second one is prizes from raffles or job or activities and awards. Next is operating profit. Next is profit due to sale or transfer of assets. Next is receipt of return of tax payments. Next, interest including premium, discount, and compensation for debt repayment guarantees. The next one, dividends, royalty or compensation for the use of rights, rent and other income in connection with the use of assets, receipt or collection of periodic payments, gains due to debt relief except up to a certain amount of stipulated by a government regulation. The next one is foreign exchange gains, excess difference due to asset revaluation, insurance premiums including reinsurance premiums, contributing received or accrued by an association from its member, additional net asset originating from income that has not been taxed, income from Sharia-based business, interest compensation, and Bank Indonesia surplus. And the basis of income tax objects mentioned in Law Number 36 of 2008 are indeed very numerous. However, each type of income tax will be classified based on the subject receiving income. The division of tax objects is divided into articles in Law Number 36 of 2008.
So, okay, everyone, let's talk about the income tax rate. The income tax rate, or we usually call it PPH in Indonesia for short, is actually calculated by calculating the income with the formula income minus all expenses. So the income tax rate is divided into two. The first one for personal business taxpayers. So it starts from 0 rupiah to 25 million rupiah. The rest is 5%, and from 25 million rupiah to 50 million rupiah, the rest is 10%, and from the third one from 50 million rupiah to 100 million rupiah, the rate is 15%. So it's from 100 million rupiah to 200 million rupiah, the rest is 25%, and it starts from 200 million rupiah to and above, the rate is 35%. So for second one, for the business entity taxpayers, so it starts from 0 to 50 million rupiah, the rate is 10%, and from 50 million rupiah to 100 million rupiah, the rate is 15%, and from 100 million rupiah and above, the rate is 30 million rupiah, 30%, I mean. So the income tax are divided into progressive rates. This means that each layer of taxable income is subject to tax according to the rate not accumulated first. The rate is imposed. Before being charged a rate, the taxable income is rounded up first from thousands downwards. For example, personal taxable income is 300 million rupiah and 9,950. So it would be rounded up into just 300 million rupiah. So about the subjective and objective tax obligations. So the first one, subjective tax obligation, is a liability in an individual or entity starting when the individual or entity receive or obtain income from Indonesia and ends when they no longer receives or obtains that income. The hierarchy of taxation in Indonesia. The first one is law, or we usually call it undang-undang. The second one, government regulation, or Perpu. And the third one is PP. And the fourth one is like the regulation from Minister of Finance, or PMK. And the fourth one is from the regulation from Director Manager of Taxes, or PER, or DGP. And the last one is Circle of Director General of Taxes, SA, or DGP. So the subjective tax liability, according to Article 2A, paragraph 1, 2, 3, 4, and 5. The first one, domestic tax subjects. It's for individuals starting at birth and ended up when they died, and bodies starting from when founded and ended when disbanded or no longer domiciled in Indonesia. For foreign tax subject, it's apart from BUT, starting from when receiving and ended up when you no longer earn the income. And the second one, BUT, starting when doing business, when they're doing their business, and ended up when no longer running a business through a permanent establishment in Indonesia. So the last one is undivided inheritance, starting from when inheritance occurs and ended when the inheritance has finished being shared. So we will share the picture of the PPT based on Article 2A income tax law. So about the objective tax obligation, so any Indonesian citizens will only be subject to objective taxpayer if the income that have met the requirements in accordance with applicable law. Please underscore it is applicable law. So there are several group of Indonesian citizens who are affected by this type of taxpayers. So based on Article 39 of Law 25 for 207, every Indonesian citizen who does not register to obtain an NPWP will be subject to imprisonment. However, this article has not been fully implemented. There's a lot of cases happening in Indonesia. Evidently, there will many Indonesian citizens who are already being high incomes but do not yet have NPWP. In fact, it's still the person tax rate will be income for them. Thank you.